The accounting records shown the following. Income tax payable for the year. This is tax estimate. Over provision in relation to previous year. So it means from 60,000 deduct over provision. So this is 55,500 expense against income tax. And there is opening provision of deferred tax and closing provision of deferred tax. So this is increase in deferred tax liability by 600. So this is again expense. So 55,500 plus 600, 56,100 is the income tax expense to be shown in profit and loss account. Next is estimated income tax for the year end is 75,000. Income tax paid for the year ended 30th September 80,000, and estimated income tax for the year ended 201 83,000. So this is the current year estimate. It will go as an expense and a liability, but we have last year information that previous year there was an estimate of 75,000, but tax paid was more than that. So if tax payment is more than the estimate, that means in the last year there was an under provision of tax. Now in the current figure, this 83,000, we have to add under provision. So the expense of current year adjusted with the last year information is going to be 88,000. So you have to drag 88,000 from here, but the liability will be current year estimate, that is 83,000. Now let's move to the next question. Hudson has the following balances in the trial balance. Taxation, we have a credit balance, that is a liability. Deferred tax credit balance, that is again a liability. The taxation balance, okay, if it is related to income tax is on credit side, so it's over provision. At 30th June, the director estimate that the provision for current year is 15,000. So opening balances are there, and estimate for the year is 15,000, and there is an over provision of 4,000. So deduct over provision. So income tax expense for the year to be shown in profit and loss account is 11,000. Now let's talk about the deferred tax impact. So brought forward deferred tax liability is 12,000. For carried forward information, the carrying amount of non-current asset exceed the tax base by 30,000, and the rate of tax is 30%. So if carrying amount exceed tax base, so the difference would be taxable, and taxable difference is 30,000 multiplied by the rate, that is 30%, it's 9,000. So closing deferred tax liability is 9,000. As a result, there is a decrease in deferred tax liability by 3,000. So it is to be treated as reduction in expense or income, 3,000. So 11,000 expense, 3,000 reduction in expense. So the total expense is to be shown in profit and loss account is 8,000. Next one. Following are the balances in trial balance. Taxation credit balance, again over provision. Deferred tax credit balance, brought forward liability. This is represented by an over provision. At year end, the director estimates that the provision necessary for current year profit is 12,000. The balance on the deferred tax account needs to be increased to 23,000, which includes the impact of these in property valuation below. So deferred tax is to be increased to 23,000. During the year, there was a property revaluation. resulting in a gain of 10,000 and the tax rate is 30%. So on this revaluation gain, there is a deferred tax issue of 3,000 relates to deferred tax relates to revaluation. What will be the charge for taxation in the profit and loss account? So as far as income tax is concerned, so estimate is 12,000. Over provision was 7,000. Deduct over provision. So expense against income tax is 4,000. Now we have to see how much is to be shown against the deferred tax. Now see, deferred tax brought forward value was 16,000 and carried forward we have to make it to 23,000. So increase in deferred tax liability by 7,000 and 3,000 due to revaluation. So remaining left over for normal P&L charge. Increase in deferred tax liability other than revaluation. And this is an expense. This is an expense. So already we have an expense of 4,000 against income tax and 4,000 increase in deferred tax liability. So it's 5,000, not 4,000. So we have 5,000 in income tax and 4,000 in deferred tax. Total expense for the year, tax expense against current as well as deferred tax is 9,000.